All right, this is the Follow Me Trades FOMC watch session. We're gonna, see what happens, what the Fed's gonna do, and then how the market responds to that. It's usually interesting, and it's a real toss-up this time. But we're gonna do a poll in a minute, see what you guys think. But I will flip my camera on for just a moment and say hello. Hello. Again, I'm Dean Jenkins, founder of followmetrades.com. I'll leave that off so I'm not a distraction, but just wanted to say greetings. Hey, and I know many of you have been, in my webinars and part of my services for a long time. Some of you may be new and could be your first time, and if so, glad you made it. Good to have you here. All right. So before we get too deep into it, let's just be reminded that everything presented here is for education and information purposes. We're traders, not financial advisors. We're not giving financial advice. All trading and investing involves risk, and risk control just needs to be used no matter what. That's the key to successful trading, regardless of how you trade, your time frame, your instruments. Risk control got to be used. So we certainly suggest that at all times. So we're here because the Federal Open Market Committee had their meeting, and they're going to announce their decision about interest rates. And of course, we have inflation, and the tool they have to control inflation is interest rates. The Fed really has two mandates, right? Two gauges they watch. It's inflation, and they have a target rate of about 2%, and we're a little above that at the moment, and full employment. And so they try to use interest rates to move those gauges into the readings that they want. And so they're trying to slow inflation. And the question is, how much are they going to raise rates? I think it's a foregone conclusion that they will. The pundits, the financial press, the Fed watchers are expecting 50 basis points, a 0.5% move. Speculation, it could be more. We'll see. We will just see how that goes. And, so that's one question. What's the Fed going to do? And then the second question is, how will the market react? And typically, if the Fed does what's expected, there's not much of a reaction. And if they do something unexpected, well, there's a bigger reaction. There's really two phases to it. At 11 o'clock Pacific, 2 p.m. Eastern, they will issue their press release, which is a summary of what they're going to do. And then a half hour later, have a press conference, and they typically provide some more detail. And that can cause another reaction separate from the initial one. And I'll show you what that looked like last time. So here's a chart side by side. This is a 5-minute chart of the S&P 500 ETF, this one here. And I've drawn a line here, 5-minute chart intraday. So it's right at 11 o'clock on March 16th when the last meeting and announcement happened. And you can see the market was chunking along kind of in a channel. The announcement dropped and the market dropped, pretty big. And then right at 30 minutes later, 11:30 Pacific time, they had their press conference and it took off the other way completely. That's a good illustration. One of my favorite instruments to trade this with is UVXY. And I've showed the exact same time mark. So when the market dropped over here, UVXY, which is a leveraged VIX instrument, popped big time. In terms of percentage move, this was the S&P 500. It moved, from that level, about 430, 431 to down here. 424, so 5 or 6 points, which percentage wise is a fraction, not that big a deal. The UVXY moved from here 1771 to here 1924, almost a $2 move, and for a $17 instrument, a $2 move is like 10%, right? So it was a little bit less than that. So 8 or 9% move for that's a good one to trade. And of course, then it went the other way. So I'll show a couple instruments that I like for trading this. And So let's look at what the market is doing right now, and it's doing pretty much what is expected. And MedHat made a comment that should have raised rates a long time ago. And there's been quite a, some pundits who say they have been behind the curve, and they would agree with you. They should have been doing something sooner. So here's the S&P 500 on a 10-minute chart intraday, and here's the range that the S&P 500, the SPY, moved yesterday. They got a lower boundary and an upper boundary, and today it's doing the exact same thing. Look how that yesterday's lows, approximately at the candle bodies, were today's lows, and as it approached the high, it backed off. And so, everybody knows the Fed's going to make their announcement, and the market's just kind of channeling sideways until they do. And then quite often there can be a breakout from that channel one way or the other. So let's do this. I'm going to, in a minute, I'll show you what the trade I'm going to take. And we got time for that because I'm going to take it right before the announcement. But I want to see what you think. So I'm going to start a poll, and we're going to see what you think. Okay, so I'm going to launch the poll. Okay, there's two questions. What do you think the Fed's going to do? And there's some choices: raise rates a quarter point, a half point, 3/4, full percent, or have no idea. And then there's a second question: how do you think the market's going to react? Go up, go down, stay flat? I have no idea. So I'll give you guys a minute to participate in that poll, and then I will end it, and we'll share the screen, share your results. It'll be interesting. You guys are jumping right in. Over half the people in the session have already answered. It's awesome. So I'll just wait till that tapers off and everybody who looks like they're going to play has played, and then I'll shut it down and show the results. Oh, it's interesting. So I'll give it just about one more minute. Like a couple more responses are trickling in. And it looks like it stopped. So thank you for those who participated. About 3/4 of the people here did. So thank you. And there is the results. Let me know, can you see that on your screen, the poll results?
Yes.
Thank you, Eva. And Eva's a team member here at Follow Me Trades. And she'll be showing us some stuff later on. Okay, so I'm going to capture, I got a screen capture here of this. I'm going to put it in my slide. All right, so the result obviously was the majority, 22 out of 35, think 0.5%, which is expected. Some people think we're going to come in lower at a quarter point, and a few people thinking 3/4. Nobody at a full point, and an honest answer, no idea. A little bit mixed. Looks like 40% of the respondents think market's going to go up. 34% think it's going to go down. 14% stay flat, and a couple say I have no idea, which is a legitimate response. So I'm going to stop the poll sharing and then share my screen there. So do you see my slide now? Is that the poll's gone?
Yes, the slide is there.
Okay, thank you. All right, let me go ahead, and I'm going to save these results real quick. Just in case we want to refer back to. Okay, but that was interesting. Okay, so a lot of people are pretty sure that they're going to do the 50 basis points and that the market will go up. That's the dominant thesis. Okay, so during these times, it's an unusual thing. We're going to have some brand new information enter the market. The market has kind of gone flat waiting for it, so there could be a move. So it's an unusual opportunity, and when we know that's coming, sometimes we want to take advantage of that. So risk control matters. It always matters, and it matters now. So I'm going to talk about a couple trade ideas for the announcement. You should approach these as though they could lose 100% of the invested capital. So only put money in that you could afford to lose, right? And I think the max would be 1% of your trade account. So that'd be $500 on a 50K account, and you can just kind of scale that up and down based on your account size. So taking a trade into the FOMC announcement, it's a 50-50 probability. We don't know. We don't know what the Fed's going to do. We don't know how the market's going to react. So there's a 50 chance that it could go up or down. But you can still be a profitable trader with a 50% win ratio if you only take trades that have a high reward to risk ratio. They're asymmetric, that if they win, they make a lot more than they would lose if they fail, right? So say if I'm going to take a trade and we're using $500, right? If it goes the wrong way, I could lose up to 500. So I'm only going to take a trade that has the potential to make 1,000, 1,500, something like that, 2 to 3 to 4x. That's the only thing that makes sense to me in a 50-50 probability thing. And if you take 10 trades that have a 50% probability of winning, but the payout ratio is 2 to 1, you're a profitable trader, right? If your winners are on average double your losers and you only win 50%, you're going to make money, right? So, and in our normal swing trading, day trading, we try to, we take trades that have a higher than 50% probability. But in this situation, I think it's fair to say it's 50-50. Right? We just don't know. All right. So what are the trades? Here's a list of instruments that I like for this situation. If you're bullish, if you think the market's going to go up, then these are all option plays. You can play the shares, but the percent move is going to be small, right? So I'm looking at these trading. These all have weekly option contracts. I'm going to use the Friday expiration, so that's May 6th expiration, and we just take it first strike in the money. I think that's the best play for these when we're looking for a big move, and we're going to be out of it today. And we're going to take the trade, let the move happen, and then either take a small loss or take a big win. So the QQQ, which is the NASDAQ 100 ETF, that's a good instrument. Trades at super high volume. They got weekly options, right? The option market is deep and wide. TQQQ is a leveraged NASDAQ instrument. The SPY is the SP 500. SPSX is an inverse S&P 500 3X. So if you think the market's going up, you want to be short the SPSX. So those are 4 candidates. If you think the market's going up, may make sense. And I'm going to take if you think the market's going down, you can do the QQQ puts, the TQQ puts, the SPY puts, UVXY calls. I showed that before. UVXY is a leveraged VIX instrument, and then SPSX is an inverse S&P 500 call. It's a 3X. Right. So if the market goes down 1%, the SPSX is supposed to go up about 3%. So those are the trade candidates. The one I'm going to take is the UVXY calls. I like that UVXY is leveraged, and it's also somewhat asymmetrical. Right. When the market goes down, it goes up more than it would go down if the market goes up, if that makes sense. Okay. So I like that. I think the market has a I'm on the bear side. I think the market would go down on the announcement, at least initially. So I'm going to take the UVXY calls. And so let's look at the option chain here in Thinkorswim. UVXY, May 6th, the Friday expiration, right? The instrument is at 15,668. So really the first strike in the money is the 1550 5. No. Let's check that. I want to see what the delta is because we might bump up a strike to get more delta. So the 15.5's got a 56 delta. The 15's got a 64 delta. So if it goes our way, you're going to get a better move off the 64 delta. So I'm going to take the 15. And so it's at $1.31, right? And I want to be about 500 bucks. I'm going to take 4 of those. Okay. We got a 128 bid, a 132 ask, and they're pretty tight. And the volume on this is just monstrous. You can get away actually with a market order, right? The open interest on the 15s is 3,600, and they've traded over 600 shares or contracts today so far. But I'll try a limit order. I'll just put the limit at 132. So I'm going 4 contracts, limit. Toss, put in a 131, one that's going back and forth. I'm just going to do it. Okay, and I'm in at 132, 4 contracts. Okay, we got about 12 minutes. So I think, things are going to settle down quite a bit before the announcement now. So I'm comfortable taking the trade now. So now all we got to do is wait and see what happens. And you see the S&P 500, moved within the channel through earlier in the session, and now the range is totally tightening. It's actually tightening into a bit of a wedge formation. You can see we can draw it here, sort of like this. It may break out of that before the announcement, but you can see the trading range is definitely narrowing as we approach the announcement in 10 minutes. So if you're willing, share what trades what trades you're taking. If any of those you liked, again, your money, your decision. I'm not giving financial advice. You could be doing something totally different. You could be doing nothing. But if you're willing and you did something, share it. I took the 15 strike, a little bit deeper in the money, a little bit better delta on the 15 strike call. But don't do it because I'm doing it because it makes sense to you. And only put in an amount you want to. Bill, he's in the UVXY, got it at $1.31. You beat me by a penny, Bill. It looks like we had some more people join us. Welcome, glad you're here. And we got 10 minutes till it hits. And then 30 minutes after that for the press conference, which can be exciting. So I'm going to switch for day trading. I use a range chart, but I'm going to switch this one to a 1 minute because that'll be better for watching the announcement. So we're going to do a 1 minute bar. So this upper chart is 10 minute, kind of shows the bigger picture throughout the day. Lower chart is the 1 minute chart. This is the diamonds, the Dow ETF. And over here is the NASDAQ, the QQQ, and I'll switch that one to a 1 minute as well. They're all going to move pretty much the same way. Dave said not approved for options yet. Any long trades that might be appropriate? I mean, you could do the, are you bullish or bearish? That's the first question. bearish. So you could take the SPSX long, just do the shares, and that'll have a decent reaction. Or you could do the UVXY long. Either one of those they're both leveraged. So if the market goes down, for sure the SPSX will go up. It has to, and the UVXY should because of the increase in volatility. You're welcome. And just, use risk control, only put in money. You're not going to, if you're buying the shares, you're not going to lose 100%. But, plan on an amount that if it lost, it would be okay, would not be a setback. And William, it's a good question. William's asking, do I think the move will be enough to exceed the spread premium on a strangle? No, that's why I'm not doing on that. There's a huge amount of implied volatility built up going into the move. And so after the announcement, implied volatility it collapses. And so you're going to have one side lose big and the other side, it has to really, really, really win big to overcome the IV crush and, go deep enough in the money to make profit to cover the whole thing. So in this situation, I don't expect a big enough move to make that work. Right on the indexes, on the SPY or the Qs or something, what are we going to see? What's a big intraday move for those? 1.5%, 2%. That's not going to cover a strangle. Those work on individual instruments. If you'd had a strangle on lift earnings, that would have made money. That would have made a lot of money. Let's look, I'm using that for fun. I think is it LYFT. Yeah, they're down 33% on disappointing earnings. Big gap down. You're welcome, William. And AQ says 15 strike. That's what I took on the UVXY was the $15 strike. And this continues to just tighten and tighten into a very narrow range. It's kind of edge of the seat time, isn't it? Let's look at the S&P 500 chart. And while I'm pulling that up, do I have a volunteer? Because I'm going to be watching the charts and offering commentary just on price action. So I won't be able to go look at what the text of the FOMC announcement is. Do I have a volunteer who has access to good information, breaking news, who would let us know what that is? And just type it into the chat after it happens. Make sure it's everyone. All right, Shiv, we can always count on you. Thank you. And so Eva, did you take a trade?
No, because if I need to go somewhere soon after, and I know I need to manage something like that.
That's wise then, because if you got to bail right after the session, you kind of have to be glued to it because it is, a day trade.
I was moving towards it and then reality set in.
So which one were you going to do?
I would have followed in your footsteps.
Oh, wow. A lot of pressure.
However, a little part of me thinks it's going to go up, but so I have some uncertainty there too. I'm 50-50.
No, I said up front, that's the probability of the trade. Right. But here's the SP 500 on the daily chart. Interesting, we have a pretty solid low put in here back February 24th, and price came down to it, breached it intraday, but then found support there, and it's heading back up. So We are technically still in a downtrend with low, lower high, low, lower high, low. Still in the correction. Shiv says he thinks the half point is baked in. And once that news comes out, the market will go up, sigh a breath of relief, and move on. We'll see. And it won't be a mystery in exactly 2 minutes. It will be history at that point. I like that. It'll be history, not a mystery.
You could coin that term. I think though, if the market does temporarily go up, like everyone, not everyone, but some are thinking, as soon as it starts thinking about what will happen next time around, we'll be back in the same boat we were in.
Yeah, could be. It's hard, given the last number of years and what, where rates have been, it's hard to think that people would be relieved at a half point interest rate hike. And some good comments. But we are seconds away. So let's see what happens. It did break out of the wedge to the upside, went to the top of the channel, which is yesterday's highs, pulling back a little bit. And we have some volatility coming in now. Everybody's placing their bet. Look at the wicks on the 1 minute chart compared to what it was just a few minutes ago. Like the old NASA countdown, and boom, it's 11 o'clock. And so it should be. So I don't think anybody has the information yet. Just volatility. Oh, look at that. Mike said like a horse race, right?
Whoa. That's making your trade look great right now.
It's flashing back and forth.
Oh, not so good now.
It takes a few seconds for the press release to get posted. We'll scan it. I know Shiv is watching and he will post it when there's something confirmed, 0.5%. Boom, there it goes. Boy, the NASDAQ's on a tear.
Up through yesterday's highs. Well,
so I'm going to give it just a minute. Yeah, and so my 15 strike UVXY is bottom for $1.32 there at $1.08. So that's what 30 plus 5. It's not that much of a hit. Yeah, so far a couple $100. And Chris says relief rally underway, duration TBD, probably till Friday, maybe till the press conference. It's already pulling back. That's volatility right there. And that's part of why the UVXY is not really collapsing, because it's a volatility instrument. It just, is asymmetric and goes up more when the market goes down than the inverse. There is UVXY. And here it comes back.
Can't make up its mind.
Quite a bit of give back going on right now. That's why I didn't jump immediately. And Shiv's posted links to a couple articles here. You have to think CNBC, Yahoo Finance, right? They had a team standing by. They had the article drafted with 2 or 3 outcomes, right? And hit send on the right one.
So it's the 0.5% as we thought. But I think what will be interesting is the news conference, because will they give any information, or will people have speculation on what will happen next time?
Right. And if they signal, more bigger coming, typically it's if this then not. But also, I think Chris mentioned, right? We had a quarter of negative GDP. What's their forecast on that? Or, we're going into a recession here. That won't be good news. By definition, a recession is 2 quarters of contracting GDP.
On the 1-minute chart, it's a wedge forming again.
Yeah, it is. Pretty wide, right? It's just a lot of volatility.
Mm-hmm.
Phased reduction of the balance sheet is causing volatility, says Chris. All of a sudden, T-bills are starting to look attractive. They topped 3%. I think it was yesterday.
Yes, it got up to 3, but I think at least earlier today it was back down below 3.
So I'm just going to see. And JC said I bonds are 9%. I saw an article that caught my attention about I bonds and 9%. They're inflation related bonds. There's some real restrictions on those, and they are a variable rate, right? So if inflation does drop, they can go to 0, and there's consequences for cash in hand. You got to hold them a certain period. If you think inflation will be sustained, it might be okay, but I saw those and I was like, never mind. Yeah, Shiv nailed it. Yeah, it caught my attention. I don't read the conditions. It said, I'll pass on that. Okay, I'm going to watch this line that I've just drawn on the 1-minute chart. If it closes back up above that, I'm going to take half that UVXY position off and then hold the other half for the press conference, because they could blow everything up then. But I don't want to let it get too far underwater. But look here. What do we have here? And as expected, as the SPY goes down, UVXY goes up. I should have put a mark about where I got in. Let me just go. Yeah, it's down about less than $50. I paid $1.32. It's at $1.22. 10 $10 per. Whoa, and here we go. And the NASDAQ is now in the red. Look at that. And dropping. AQ says, wow, staying in the 1 minute wedge. It's kind of a big wedge and growing. As I try to manage this, now that, we had the initial jolt, all right? And it went up, pulled back, went up, didn't put in a new high. This is a pretty big low. So if we do a low, lower, high, low, I'm gonna try and stay with that at least up till the announcement. If it goes back up here, again, I'll close half. Not through the announcement, through the press conference. It's just all about trying to manage it, have a set of rules. It might have went into profit. Oh, here it's reversing off my moving average and cloud. I was getting alerts on my phone. Breaking news. Fed raises interest rates 0.5 point. Yeah, we knew that. And Surrender, hope I say your name correctly, ask is what the probability of I bonds paying between 9 and 4 for the next 5 years. I don't know. It's dependent on inflation. I would give up the yield on I bonds to not have high inflation for the next 5 years. And Surrender's asking any guess. So I'll give my opinion. I have no idea. I can't guess if anybody else has an opinion. If we have high inflation for the next 5 years, there will be much bigger problems than the I bond yield. Yeah, and if you, I know Shiv likes yield. He mentions that often. You know, for some folks that have asked me, you know, hey, what's your investment advice? I go, well, I'm not a financial advisor, but like family members who just want yield. You know, I think some of the yield ETFs are attractive. You just have to understand that the cost basis is going to fluctuate, right? You just have to ignore that because you're there for the yield and be in it for the long term. You know, yield ETF just goes and, you know, it's a ETF or a mutual fund that focuses on high yield stocks and buys a basket of them and distributes the dividends. And Shiv's good, given a couple ideas there. Okay, so we're at 13 after. We got about 17 minutes until the press conference. I'm just watching the 1 minute chart here and kind of figure out what to do. Oh, there it goes again. Yeah, look at that. 17% yield. That's nice, Shiv. So I'm going to have Eva bring up our watch list, because now that we're past the announcement, in our Real Traders Club, you know, daily live session, we maintain a watch list of trade candidates. And so we were kind of keeping our powder dry until after this announcement, but let's see if some of them triggered. So Eva, we want to take the screen and walk through and show how some of them are doing.
Sure.
Be
Would love
awesome.
to. All right. Grab it. If anyone has any questions, comments while I'm going through, feel free to put it in the chat. I'll keep an eye on that. So we have a watch list, and green is nice setup. It's a possible go if it meets your trade criteria. Red, not quite ready to get rid of it, but it's starting to not meet criteria. But Pepsi was a red, and it's turning around. And then yellow, it's almost there. Should keep a close watch on it. And these change daily. So let me show you. Yeah, we'll bring up Shiv again. Shiv brought up Pepsi. Let me spread this out. Because he thought it was forming a cup. He was looking for the handle. Why this looks great is the cup is formed, found support, reversed off of the 50-day simple moving average, and has continued up and is about to go. It's wicked out of the cloud, is pulled back, but you know, this could be a nice little short term where you could go to the prior high or even beyond. So Pepsi was setting up nicely today. When we looked at it earlier this morning, it's even better now. Then I'll show you one like BLDR. It's up, but it's just not quite there yet. Conflicting pyramids, it's channeling, it needs to break out of the channel. SHW. I like this because it gapped up. It went up further, pulled back to the top of the gap, now is reversing. So you could have a stop, entry, conservative target at the 200. So nice setup there.
That really is looking good. That's a good one. I like the way it pulled back too.
And then I just added AMD. This was one that's kind of caught my attention when you're talking about the NASDAQ. It's up 3% today. It was up more earlier. What I like about it is here's wave 3 was up. This is a wave 4 retracement. Look how it really consolidated, retested the low, and now it's gapped up and it's broken out of this channel. There is a gap here. I'm always very concerned because gaps can act as very strong resistance and support areas. I just want to make sure it has the momentum to get through the gap and doesn't pull back there again. So if you're very aggressive, it's looking good, but I would like to see it have the momentum to get up through the gap, maybe have more than just one day up, not chase it at 3.5% today. And the other one I continue to like is Facebook. It's set up very, really nicely. It came down to a new low, gapped up, pulled back. So we have a high, higher low, higher high. Stop, entry, very conservative target to this reversal point. It has a huge gap. It could fill, some of that gap could go higher than this prior high, fill some of the gap before it reverses. But it's set up very nicely. And then two other ones just to keep an eye on, HON. It is now right above. My biggest concern about this one is the gap. Will it have the momentum? But it has made a really nice move off the bottom. I'll show the whole. So you can see wave 3, 4 really has started into wave 5. And as I said, it reversed off this gap before, came up, pulled back. So this gap is pretty strong. So it just depends if gaps bother you as much as they bother me. And then BP with energy going up, it was an energy trade. It gapped up yesterday, gapped up a little bit more today. It's right at this prior reversal point. Just want to see it go through there. You can put a stop, at the gap. Your entry, you want to be up a little higher, target up to the prior high. So that could be a good way to play all these energy moves, because a lot of them are too far along in the wave 3 count to chase them, but this one is not. So I'm going to, Dave has a request, ATER.
And that's one of our swing trade picks. It was a short-term play. It looks like it may not make it for us here, but it was worth taking. It had a big potential.
Oh, sorry. I'm trying to, I have to pull one of the candles to pull it up. There we go. Just, it fell quite a bit. So to see it, we really have to.
It's what we
play
call
with
a
the chart.
bottom feeder, one that really put in some lows and then starting to come up off it.
It is finding support on the cloud, so reversal could still happen. So, yeah, I wouldn't necessarily get into it right now until it gets through the 200. But if you see the momentum switching, it has plenty of room to move. So, and it is forming a pretty good sized wedge at this point.
And
Or channeling.
They're going to announce earnings on the 9th. So you have to be cognizant of that. And we're going to be managing that trade before then.
So Shiv is so funny because often stocks I look at, Shiv's like, oh, I already took a trade on that today. So he just commented. He took a trade this morning on AMD. So I'm sure he's up with that. So Bill would like to look at UVXY.
Well, he's just saying that's the trade we took. And it says
got a little profit. I'm sorry.
Once you bring up the SPY on a 1 minute, because we're for those of us that were a little bearish are sort of happy with that right now.
Did it switch? Oh, it's switching. There we go. Oh, it is heading down. Definitely.
And it is now, that position is in some profit. Got in at 132. It's sitting at 143, $11 per contract, $40. Better than nothing.
So I would look at it as this was a move up. If it keeps going, then this will be the impulsive move down. Where you're probably looking at it a little differently than I am.
Yeah, I think it only really matters after the announcement because that was all new.
Okay. So this is definitely now the impulsive move if we're just looking at from the announcement on.
Yeah, we got 8 minutes.
I don't even know what, let me get rid of this line. I'm not sure why I put that in.
It was probably from a different time frame. So we're 8 minutes out. Looks like it's starting to reverse. Let's see what it does here for a second.
See if it finds resistance or not.
Yeah. Say it's got the edge of the seat kind of thing.
It looks like it wants to get through the 200, but it just can't get that momentum going. What are you looking for, Dean? For it to have a bar close over the 200?
Really above that last kind of reversal, right where it's at. If it closes above that, we're going to be at about break even. I'll take half off.
Okay.
Yeah, and we're on the contracts. We're at break even now. So I'm gonna sell 2 at break even. And that just reduces the risk. And then I'm going to hold the other 2 through the press conference. We'll see. And that's 6 minutes away. It'll take a little bit longer because, you know, he's got to say nice words and then finally get to the meat of his speech.
Well, you showed that example last time that was, looked like it was towards the middle end of the press conference. Took about a half an hour in before they interpreted.
And they may distribute the
minutes ahead of time.
his speech, you know, prepared remarks, because the reversal happened last time. Yeah, during the first 10-minute bar. So it was pretty quick, actually. So we got 5 minutes. What I'm going to do is, you know, if you enjoyed this, we do something similar, and Eva just showed the watch list, right? So every day, you know, Monday through Thursday, we're here looking for trades. And so if you like this and you would like to join, we call it the Real Traders Club Live. Pretty fun. And you saw comments from Shiv, and there's a couple others. They actually turn their microphones on and contribute. But if you would like to join us, you know, each morning, Monday through Thursday, where we're updating the watch list, looking for trades, demonstrating chart analysis, answering questions, doing some training. You know, it's just a, you know, like I say, trading's a journey, man. Why go alone? So if you'd like to join, it's just $57 a month, which, you know, it's a couple bucks per sessions. I think it's a pretty good value. So let me give you a link to that in the chat box. There it is. There's the offer. And, you know, if you sign up, I got a bonus for you. It would be my Ichimoku Cloud training course. And that's lists on my website for $247. You'll get it today for free if you subscribe to the Real Traders Club Live. Okay. It's a great course. If you see on our charts, we are using Ichimoku Cloud, and it looks different than you would normally see it, you know, out of the box. We have some unique settings and custom application of how we use the Ichimoku Cloud. You see it here, looks way different than your standard approach. And so I have a course that explains those settings and how we use it. It's one of our most important indicators in trading. So if you like this session and you would like to participate in something very similar, where we're, you know, looking for trades, managing a trade list, doing some training instructions, we are here and we would love to have you join us. So the link is in the chat box. And again, there's that bonus for the HMOCO Cloud course if you sign up. In addition to being here live, we have a forum, and that watch list is available around the clock. So you can always go look at it. The one that Eva just showed is actually there. If you know, for subscribers, you can come to the Real Traders Club. Here's the watch list, and you will have access to that, and you can view it and download it anytime. There is the link, and there is the watch list, and it's dynamically updated. So even if you can't make the sessions, they are recorded, they are posted, and you have access to that watch list, which again is updated dynamically. And we send out a summary after every session about, you know, here's the trades that look good, here's the ones that fell off, you know, all that. So again, if that sounds interesting, we would welcome you into the Real Traders Club. All right, now it's powering up a little bit. Here's the prior highs. So I guess we're just going to wait for the press conference. I did take half that position off. At this point, you know, that was at break even. This point, you know, the most I could lose would be a couple $100. So it's worth hanging out and seeing, you know, and if it goes screaming up, you know, I might lose $100. So that was worthwhile, because if it had really dropped, we could have made some good profit on that. So there we have it. And we got 60 seconds before the press conference starts, and then there'll be, you know, a few minutes delay. Any questions anybody has? Like to type in while we're just kind of waiting and watching here. And I know we have some existing customers and subscribers, members of the Real Traders Club Live. If you want to offer any of your thoughts to the folks who may be considering that, type it into the chat box. That would be, I'm sure they would welcome that, because, you know, we live in the world of reviews, right? We rely on reviews for a lot of our purchase decisions. I had to find a funeral home to do a cremation for a elderly aunt who passed away recently. and I found myself looking for reviews for a funeral home. But it's helpful, right? Yeah, and Shiv has been a long-term customer, and we appreciate you, Shiv, very much. Like I said, it's 37 bucks a month or 57 bucks a month, and about 20 average of 20 trading days in a month. So that's less than $3 per day to get some pretty high quality actionable trade ideas. So Dave, that's funny. Well, we just had a pretty good drop there. I don't know if anybody has any breaking news on, you know, like I said, sometimes I think they distribute the prepared comments ahead of time, so you don't have to wait for him to clear his throat and welcome dignitaries and scan it. And there's a legion of financial reporters, right? Hands are hovering over their keyboards, ready to go. Mark says he's doing his speech now.
So Dean, I don't know if you heard me a second ago. Can you hear me now?
I do.
Okay, the FinViz map you might want to show, because earlier today it was pretty flat, you know, red, green. It's more green now, surprisingly, even though we don't have any clear direction up. It appears to be.
Yeah, that's a good idea. I'll bring it over. And FinViz is a pretty cool website, financial visualization, and they got a heat map of the S&P 500. Yeah, and they got ads. It's free, so you gotta deal with the ads. But it's a nice way to look at the market. You can change your time frame. So this is intraday. It is delayed data. I think probably about 10 minutes. But you know, the size of the square is based on market cap, and then the color is based on, you know, how much it's up or down. You know, the brighter the green, the more it's up, the brighter the red, the more it's down. It's a great tool for just kind of scanning the market, see what's going on, and then you can go look for opportunities.
It
I
clearly
think we-
helps identify sectors when you see like utilities is all green, energy is all green.
Yeah. And semi, you know, a while ago, that was just glowing red, burning a hole in the screen.
I just thought it was interesting because when we looked earlier today, it didn't have as much green on it.
All right, where was my? Okay, so we got a little bit of a, we're taking out the prior low here. So the contract, it's up in profit. We're not getting rich, but it's got it at 132. It's at 137 and heading down. Look at that, rock and roll. It's kind of opposite of the March reaction, which I showed earlier. Last FOMC announcement. On the announcement, it was down initially and then up. This time it was up initially and now looks like heading down. And we're heading down to the bottom of this 10-minute channel, which is a channel from both today and yesterday, a lower boundary. So if we smash through that, then that means the market is not happy. And you can see, so the S&P 500 is down 0.38%. You know, that not even a 1% move from the top, right? And the reason, one of the reasons we like UVXY is the disproportionate move, right? Percentage-wise, from the bottom 15.20 up to 15, call it $16, 80-cent move. That's a huge percentage move, right? And onto new highs. That is awesome. And $1.50. If it breaks this low, and if you were one of the bullish folks, that would be a good sign to go ahead and give up on that bullish position, in my opinion, if you haven't already. Not giving financial advice, just observing the chart. It did find some pretty good support there, didn't it? It's just kind of choppy so far, not a real direction. It's almost like a reverse wedge. There was the wedge going into the announcement, pointing to the right, as true wedges do. Now it points to the left, right, where these swings are getting wider and wider. I'll put that link in again in case you were interested in the offer to join the Real Traders Club. Some more detail there and the ability to sign up. And as I mentioned, there's that bonus of the Ichimoku Cloud course if you would like to sign up with us. Surinder is asking, is UVXY suited only to day trading? Short term. It's only suited to short term trading. I've held it over a couple days before. It's not intended to be a long term instrument. Most of these leveraged deals are based on futures, and the way they roll and settle, there's some complexity to that. And so you don't really see the long-term trends on them that you do on, straight instruments. So it's intended to be short-term day trading for a couple days. I think I was talking to Mark earlier. I forget which instrument, Mark, you had said, right, that went from 10 cents to $100 or something, and then went to almost nothing. And I can unmute you if you like.
I'm here. SVXY, so the opposite of the UVXY, was one that if you look at a long-term chart, but it absolutely, it started out low and it continued up and up and up into the hundreds. And then when the volatility disaster happened a couple of years ago, it just crashed and burned and went down to nothing. People lost millions. So you don't hold it, is the bottom line.
Yeah, so they're very short-term trading instruments. It makes me think of the people who were trading oil futures when they went negative. It's like, what do you do with that, man? I think that was last year, right?
That was at the start of the pandemic.
Oh yeah.
Yeah, it was like May, it went negative.
They were paying people to take oil because they had nowhere to store it. And that's when the tanking companies, the tankers, were going up because they were just filling them and sending them out to sea.
Yeah, go cut holes in the ocean. That's what we used to say. When I was in the Navy, we were on patrol. What are you guys doing? We're just out cutting holes in the ocean. What do I think of TBT? I think that's the inverse bond. Yeah. There's TLT and then there's TBT.
Yeah, it's the intermediate. TBT is the intermediate inverse.
I think that's been on quite a tear, right? And it's approaching its, if not all-time high, at least 52-week high. I don't chase things that are this mature into a trend. I would not take it long at this point, and there's no indication of a reversal, so I wouldn't take it short either.
There's also a TMV, I believe is what it is another one.
It's an inverse of TLT. Yeah, same story. I wouldn't take it this short. I wouldn't take it long. I wouldn't trade it at this moment. There's better things to trade. As Eva showed earlier, we do like Pepsi right now. What was it? Was the other one what, BLDR, Eva? That looked great.
BLDR, Facebook's looking good.
Yeah, Pepsi's looking good. I typically Coke and Pepsi would move somewhat together. They look very similar. That doesn't look bad up to the at least prior high. So we don't want to just go and go, I don't like it, don't like it, don't like it. We definitely want to show what we do like. Yeah.
Sherwood Williams.
This one just needs to
SHW.
break this high. SHW. I mean, that one actually is, it's SHW. We cover the world. The way, it gapped up on earnings, found support, pulled back to the support. Now it's heading up. This could, at least up to the 200, and your stop's going to be here. So if we just draw that, reward the risk, right? Your stop would be here. If it goes lower than that, you close the trade, take small loss. Enter here, current price, and I would set a target at the 200-day moving average. So you can see this is 2 or 3 times the distance your reward to your risk. Beautiful. And Shiv just posted a link for Pepsi seasonality. So not only does the chart look good, but there's a historic seasonality pattern that supports it moving up this time of the year. So we still just got some real choppiness, but if we look at the 1 minute, right, we just use some simple chart analysis. We have, from the announcement, from these peaks, so far, we just kind of draw a regression line through that, a downtrend, and it's reversing. So it's volatile, it's swinging, but it's swinging at a downtrend, low, lower, high, low, lower, high. If it keeps doing that, this UVXY, we're just going to hang on to it until this changes. What you want to watch is some point, if you start getting higher low, new highs, if we break through the trend line, then we would want to exit that position. But for now, it makes sense to stay with it. Okay, so I'm going to leave you with that thought, that guidance, and I think it's a good point to go ahead and wrap up. We've had everything happen that we were looking for. So we got to watch it. It's at they're staying pat at 0.5. Don't know what he's saying in the press conference. But we showed a couple trade ideas, and the whole point there was about managing risk and having a good reward to risk. And I think we also dropped some nice swing trade stock ideas on you. So hope you found the session valuable. And again, if you would like to join us on a regular basis in the Real Traders Club Live, would love to have you there. And with that, it looks like this is now above my trend line. So if it closes here, I'm going to go ahead and close the trade. Let's just see. Yeah, that's pretty clear, right? That seriously broke the trend line. So yeah, let's go ahead and close it. And so it's down about $50 per contract on that big move there. Come on. All right, I'm out. So we got out of the first half at break even. I think that might have been, down $100 max. So it was worth doing. And clearly this trend just changed from down to reversing. So it's a good time to get out. So hey, it breaks down low here. The bullish folks might want to bail. Now you might want to stick with it if you still got your position, because now we're putting in new highs outside the channel. So that could continue. All right. Any last questions before we wrap it up? Again, I hope you found it useful, interesting, and we would love to have you join us on a regular basis. Going once, going twice. AQ, hey, you're welcome. Thank you. Thank you. Dave, thank you. All right. Hey, everybody, trade safe. You always use risk control. Keep your winners big, your losers small, and have fun. And some of you we will see tonight in our swing trading live session. We'll see some of you tomorrow on the Real Traders Club, and others hope you join. If not, we'll catch you at the next event like this. We have them a handful of times per year. You are welcome. Thanks. Sergio, Al, Daniel, Surinder, everybody else. All right, take care, and we'll see you down the road. Bye-bye.